Hi, thank you so much, Anthony. Really looking forward to this session with the amazing lineup of speakers. Hi, Abasi. I would say good afternoon, but I don't know. I know you're elsewhere, so it might be good morning for you. Thank you for joining. Hi, Ife.
Good morning.
Good morning. Good morning. So
No, good afternoon,
transatlantic.
wherever we are.
Martha is just having some difficulties joining us, but not to delay. We're going to be able to get started. My name is Ogundeyi. I'm the country director at the UK Nigeria Tech Hub. I'm also a tech entrepreneur, so I'm really looking forward to this conversation. I'm going to give the other panelists, Ife and Abasi, just a minute to introduce themselves, and we'll ask you to make it concise. And then we'll go into sort of the exciting topic of life post Series Seed and scaling companies in Nigeria.
Over to you.
We'll go in alphabetical order. So
Yeah.
Okay. Hi guys, my name is Abasi Ene-Obong. I am the CEO of 54 Gene. We started in 2019. Prior to 54 Gene, I actually started my education in Nigeria and then in the UK. I got my PhD in cancer biology in the UK and a master's in human genetics and then a master's in business from the US. Worked as a management consultant in the US market, then moved to Nigeria to start 54 Gene. We're a health tech company and our focus is how to make precision medicine available to Africans and the global population. In that mandate, there's a few different things we do. One is drug discovery, another is molecular diagnostics. It's a pleasure to meet you guys.
Thanks, boss. My name is Ife Oyedele. I'm the co-founder and chief growth officer at Kobo 360. Kobo 360, some may know, is an e-logistics platform connecting businesses that have cargo to move with the transporters that are able to service them using analytics and deep AI. We are now in 7 countries across Africa and expanding. So we're excited to be on the call. I'll keep mine very brief.
Thank you. Thank you. I thank you both. So just to get the conversation kickstarted and why we don't like to focus on some might say vanity metrics around how much we've raised. If you start by just telling us a little bit about where you are in the company sort of growth stage, just to give some of the attendees context, and then we'll go jump into the conversation around the expectations around scaling and what are some of how does it feel when we're scaling and looking at people and looking at that investment landscape and trying to actually, now I know if it expanded geographically as well. So I really want to be able to learn more about the intricacies of doing that. So maybe start by just telling us a little bit about the company and where you are just in terms of stages and what you've probably raised today. Yeah.
Yes, so we closed our Series A in 2019. We led by Goldman Sachs and IFC followed on. As I mentioned, we're in 7 countries, and one of the key things to our success is how we focus on expanding. A lot of people, the advice we had gotten earlier on was to go into these markets ourselves, but what we learned was that attracting local talent that understand the logistics space and the technology space was the ideal market entry activity to follow. And that was what we focused on. So we localized our technology. Of course, we centralized the building of the technology, but in terms of setting up a team, it was all locally built. We're in Kenya, Nigeria, Ghana, Togo, Uganda, Ivory Coast, and Burkina Faso. And in the Francophone region, of course, I don't speak French, so all our team members speak French there. But one of the key things was we identified that our product can actually add value when we expand into this market. So we're not just going there because, there's this idea of we're overly ambitious and wanting to expand into a new market. We saw that logistics, or rather the lack of technology in logistics was a major factor in the inefficiencies in that sector. And that was when we started moving around these geographical planes to see how we can tweak our product to service the businesses and the industries in these markets. And quickly as we saw that the African Continental Free Trade Agreement was coming to play, or was coming to light, we now felt it was more like a stamp of approval that we're entering this market and focusing on building the technology at the right time and at the right season and in the right market. So that's really where we are, and we're going to continue to expand and offer our product to other African countries and even beyond Africa as well.
Thank you. Abasi?
Yeah, so we got founded in 2019. Between then and now, we have raised about $21 million. We have a bunch of Silicon Valley type investors in our company. We are a different type of company though. We are very deep science and heavily research based. But what we do serves a global market as well as a local market. And so, we've been able to grow pretty quickly. It's interesting that as an African company or an African founded company, 2 years after we started, we are bold enough to say that we are going into drug discovery, where no African company has actually made any innovative new medicine. So, for us, it's about putting our heads down. It's about working. It's about, building talent where talent is. We try as much as possible, and our focus is make sure that you're making investments in Africa, and as the African part of our work begins to expand, we're looking at expanding to other regions within the continent. But yeah, we are in a place now that we are very confident to move into the next phase of our business.
Thanks, Abasi. It's super interesting. I love to dive deeper into that drug discovery element and how the challenge of sort of breaking new grounds in the health tech space, especially at that stage. But let me ask you, Ife, how does your role as a founder and the expectations of the business change when you've raised for scale and growth? So you've raised from Goldman Sachs, you've promised that you're going to do X, Y, and Z. What starts to change in the business and for you as a founder?
So I think the first thing that changed was that, you go from building a company to, oh my gosh, we're really building a company, you ask yourself 3 questions when you're building a company. What am I building, and who am I building it with, and who am I building it for? But that changes. The number of questions you ask daily changes. What are your growth metrics? What is your revenue? How many employees? What is governance like? So everything changes. You now realize that it's not just about you anymore. It's about the investors, the stakeholders, your employees, all the clients, all of those things. So your landscape expands, and you have a lot more to deal with, and it gets exciting. But I'm sure Abasi can testify that they're the tough times and the difficult times. But one advice we got from a mentor, and which I wish we tapped into the mentorship programs earlier on, was that we need to start wearing 3 hats very early on in the business, which is wearing an investor hat. So imagine you gave money to your own business. How do you want your money to be managed? You also now have to keep on wearing the founder hat. So how do you innovate? How do you grow? And then you now have to wear that employee hat. So you're now also an employee because you're working for your company that is not just about you anymore. It's now about, a bigger landscape of investors. So a lot more to deal with, but think about it as you have a lot more professional help, a lot of bandwidth to understand what that scale really means and how you want to achieve that with your circle that you create.
Yeah, that's great. I mean, and how would you agree, Abasi? What changed for you sort of post, you did YC, if we go back, you did microtraction and YC, and then, you've become a rocket ship since then. What does that look like? What changes for you as a founder and for the business?
I mean, Ife is totally spot on. And you begin to see that you yourself as a founder change, you change, your understanding of your business.
You have more swagger when you're walking.
No, not actually. You're more humble. There is actually more humility, to be honest, because behind the scenes you're seeing, there is what is announced and what everybody sees that is announced. But you're dealing with the day-to-day, with the people issues, with failures, with questions that you probably can't answer. And sometimes people think that, we start these things and we know the end from the beginning. I look at myself as a student of my own company, right? So, I am learning and looking at the data and trying to learn, how to do it better, where the company is telling me to go to, right? And so there is an intuition that is necessary as a founder of a company. You also want to be humble enough to listen to people and what is out there, but also be courageous and confident enough to have your own mind about where you think you should drive your business to. And so, yeah, one of the things I've seen is I've changed and I've grown a lot, but so has my company and all the individuals within it.
Thank you. I think that's really great. And I just wanted to say welcome to Marta for joining us. I know you had some technical issues earlier, and welcome to the panel and the conversations on the way. I'll probably start with the next question from you. You've founded multiple companies and fundraised as well. What have you seen in terms of how your relationship evolves with investors as a company sort of progresses? And what do you consider sort of as the main fundraising process change from when you're raising a pre-seed, sort of early pre-idea, to when you start to get into the series and the sort of big game of really making commitments, your metrics, and making sure that you're hitting those or surpassing it in a better case?
Thank you so much for having me. And yes, both excellent questions. What I'd say is, maybe starting from the second part of your question, when you're raising early stage, in a lot of ways, your business almost doesn't exist anymore. A lot of the investment process is about yourself. It's the commitment that you've got to the cause, the founder market fit, the ability to prove to these investors that even if the product you promised to build doesn't work out, you'd be able to pivot, find a new opportunity. So much of it is about the personal relationship between the money and yourself. You're sort of getting to Series A, that obviously is when you are supposed to have proven that there is a product market fit. And sort of that journey, Series A onwards, is very much about being able to, I like to refer it to as showing the investors the money machine. You put 10 million in here, I'm going to put it through my sophisticated marketing mix and expose the customers and the clients to the products that I've built. And on the other end, we're going to create, 5x that in value. So obviously what happens to sort of at the earlier stages to be a conversation more that is based on strategy, vision, alignment between the investor, the person, and the products, it becomes much more of a conversation about key KPIs, metrics, ability to plot out your trajectory and show that financial future that your business is going to be delivering. So there is definitely more of a focus on the data piece. What I'd also say is, a helpful investor, and let's face it, not everyone is, but a helpful investor would likely leave you to your own devices, sort of pre-Series A, give you strategic intros, support you when asked, but would not be bothering you with calls 3 times a week. What's going on? Report back. Probably Series A, some companies, this is when they form a formal board. Doesn't necessarily have to have a chair, but probably, your key investors are going to have a board seat, you or your co-founders are going to have a board seat. And this is when you just need to invest a little bit more in running that process and in actively managing your board. And here, one thing that I would say is make sure that whether you're CEO or co-founder, that this, especially the CEO who mostly runs the relationship with investors, that there is space to delegate to other people on the executive team to run the company when you're spending this 10% to 20% of your time managing the board and preparing for subsequent fundraisers. Sort of the later the stage, likely, unless your company is doing fabulously well and everybody is trying to get into the round, it probably can take up to 6 months to fundraise. So making sure that there is enough flex on the leadership team so that the company is not under-led when you are dealing with fundraising and investors.
Thank you, Marta. I think those are great points. I just want to quickly touch on something now around COVID-19 and the pandemic and what it means for when you're building also at scale and you're building growth companies. If your company is very operational and Abasi, your company has been impacted in a different way, which means maybe, for example, you are now expanding into B2C versus a B2B slant due to the pandemic. What have you seen and how has that affected your business as in terms of continuing to grow and continue to scale, even in light of what's going on? Has it opened new opportunities? Has it make you go into new areas? And how does that evolve? How does that affect your business? I'll start with you, Ife.
Unfortunately for us, I would say we are playing in a sector that is I don't want to say pandemic proof, but it is a necessity in crisis. You have to move goods, you have to move food. People still have to eat in the most desperate or situations. So when the COVID-19 hit, specifically in Africa, of course, it came as a surprise to everybody, and there was a lockdown in very many parts of the country. And I don't know if you saw the news back then, but we had trucks that were backed up for about 65 kilometers or more at the Uganda Kenya border. So that was an exciting time for us. We saw the business decline about 25% during that period. But it quickly bounced back in about a month and a half because we positioned ourselves with our clients, with our customers, as a strong partner. So when it came to delivering, COVID-19 food relief and all of those activities, we were there. When it came to we didn't hike the prices, even though things changed. We just said it's business as usual. We'll provide all the necessary safety equipment to ensure that our team continue to work and continue to service our clients. So that was one of the key things that stuck with us. Our clients see us as partners, as business partners in this relationship to grow. And one of the other key things that we saw was that how flexible are we? How quickly can we adapt to crisis situations? We went from everybody working in the office to working out of the office, working remote. We were able to get many of our customers to agree to accept digital transactions. Before, as you know, in Africa, we still love paper transactions, but the pandemic showed that technology actually can work in Africa. It can work for us. It can help make doing business easy. So we saw a lot of a significant increase in technology adoption across the platform. And it actually was a sort of an eye-opener. Of course, a lot of bad things have happened and we've lost a lot of lives, sadly. But I think now businesses are learning to reiterate their products and their services, innovate and adapt, remain flexible and lean so that they can scale quickly in times of situations like these.
Thank you, Ife. Abasi, did you want to add a few lines on that in terms of how it's changed for your business?
In our case, it was sort of different in the sense that we were in the healthcare space. Well, we're mostly in the life science research space. And we had built a lot of capacity within our company for life sciences research. When the pandemic happened, and we operate partly out of Nigeria, for us it became an ethical thing that we had to get involved in the healthcare space, because I remember at the beginning of the pandemic, Nigeria could only do about 200 tests a day. And we had a lot of capacity in terms of instrumentation, relationships with global suppliers, the scientists in-house. And so we quickly, I wouldn't say we pivoted, we just added another layer to our business, which was a healthcare delivery layer, and quickly set up, the ability to do COVID testing. Initially, we were the ones actually carrying a lot of the COVID testing for the government. And then as that market expanded, we actually taught quite a bit of the private labs how to actually provide these services. So for us, it showed us that there was another opportunity in the African market, and that was how do you provide, more higher, specialist type tests for molecular diagnostics to treat infectious diseases, cancers, and the likes. And so it gave us another additional layer to our business.
Thank you. So we're just coming to the end, and I want to see if I can squeeze in a question on from the audience as well. But just a question, what would you do now differently in terms of raising a Series A or a seed round? What are some of the things that you've learned, or what are some of the things that you see as a common mistake? I'm just gonna ask everyone to keep it quiet, to focus on breath because we're running out of time. I think you're muted.
What are you asking?
So I was just asking a question. I don't know if you heard it, on what you would do differently if you're raising a Series A or a seed round. And I was asking Marta if she would start.
Thank you. Yes, sorry, I haven't heard the question was addressed to me. So one thing that I've seen is quite often fundraising goals are based on the investors that you think you need today that would be able to help you with the immediate challenge that you've got today. And especially raising Series A and plus, is very helpful to think about investors that will be able to plug you into the networks and resources that you will need 2 years down the line, so that they help you get over the milestones for the following fundraise. So actually something that I'd say I've actually done well that I'd repeat at Azomo was raising Series A from an investor based in Germany. My business was based in the UK, raising an investor in Germany, knowing that we wanted to do international expansion and using them to be able to make that step. So I would recommend looking for investors that have specialty areas, either geographic or industry, in your next big market.
Thank you. Ife?
Yes, so I think Marta touched on very, very key things, as we also did the same thing when we're looking to expand. We looked at people who have a global reach because we had the mindset of expanding quickly. But one of the things that we sort of learned during our Series A round was the value of the numbers that we're portraying and what our metrics mean to us. When we're early, we're rushing out of the door, after raising a seed round, and so we get too excited because people are adopting your product, and the investors just want to see numbers, they want to see metrics, they want to see that financial model. So quickly get your ducks in a row. One of the key things that we didn't also do well was talk to other founders who had raised funds. We didn't have enough time, so we're just trying to balance fundraising with growing the business. So engaging, we learned too late in the game that a lot of founders have gone through this process. So we could have just reached out to them and gotten some pointers about what our financial model should look like, what numbers we should be portraying, and how we should be thinking about governance. Governance is key when you're about to raise a Series A, because you're now taking big money from institutions. So they have to know that the person that is taking that money is going to manage that money very, very well. So I just wanted to point that out.
Thank you. And final word with you, Abasi.
Yeah, just briefly, don't raise money at the beginning of a pandemic. So as we were raising, the pandemic started, and the market, everybody was scared. The fact that we survived that whole experience was interesting. But I concur with everything Ife and Marta have said, and what I want to just add is, very early on, bring in investors who care about the foundation. If your goal is to get acquired or to go public, you really need to start early. If you don't start at Series A or even earlier, it might be you're going to pay for it. And so part of that was bringing in investors who knew how to connect us into the life sciences space, but also investors who knew the right compliance things we needed to be doing, the right governance things we needed. And so, I can go into subsequent raises confident because we spent all that time, laying the foundation.
Thank you. I just wanted to say thank you to all of you. I think those were great points. So from find strategic investors, to talk to other founders, to really look for investors who can help you in the journey in which you want to go if you're interested in exit or IPO. Abasi, Marta, and Ife, it's been an absolute pleasure to learn from your vast wealth of knowledge. Thank you for joining the UK Nigeria Tech Summit, and hopefully we'll see you again. Thank you so much.